Thanks for tuning into the Trade Setup with me, Niraj Shah. Let's take stock of what's happening. Remember, the US markets were shut yesterday, so we don't have cues from the US markets, but the European markets are done okay. And let's start with the global news flow. The EU stocks got a lift from rate outlook and the dollar dips. And the reason why the rate outlook, so I'll just briefly tell you. The central bank out there has said that there will be 2 rate cuts in succession starting from next month. And I think that led to the European stocks getting a bit of a lift off. Asia is a bit of a mixed bag, you have to admit. Nothing too great out there. But treading water before the inflation data, key inflation data that comes in. Remember, from an Asian markets perspective, some very key macro data coming in from India as well. GDP numbers come out on Friday, and then the election verdict comes out in about 7 days, right? So in some sense, there is a heavy calendar for Asian markets as well. What else? Oil has climbed as geopolitical tensions rose ahead of the OPEC Plus meeting. Now, there too, I'll tell you, interestingly, what's happened is that there was a bit of an unfortunate incident. There was a death of an Egyptian guard during a clash with Israeli troops at the Gaza border crossing on Monday. Israel Defense Forces said the shooting incident had occurred at the border and discussions with Egypt were ongoing. Now, does this add to major uncertainty? Don't quite know. But clearly, oil, after 4 days of being in a bit of a decline, has just shown a bit of a lift off. Interestingly, somebody buys something off China. ABN AMRO has bought a German bank, Hock and Aufhäuser, from China's Fosun. So that's the other interesting bit that I thought. By the way, speaking of Europe, did you really know about this statistic that Europe is home to 17 of the top 20 countries with the highest death rates? Talk about an old continent, and Europe is already there and hurtling faster towards becoming an even more older continent. And which is why I think so many of these governments are giving out dole-outs for people who are happy to produce babies. I mean, it's just quite stunning really what's happening around the world in different parts, in different ways. Some countries struggling with the population explosion, some not so much. Anyways, let's get back to markets. The trade setup for the day today. The Nifty, remember, had a volatile day yesterday. So FI short covering and long build-up continues on a volatile day as well. I'll get them some statistics here, but the long-short ratio has moved up from 42.11% on May 23rd to 48.75%. And that's a telling statistic. I'll also give you one more statistic, by the way, about what's happening on the long-short side from the FI side. The last 3 days, viewers, hear me out. I don't have graphics for that. Hear me out. FIs have added $1.43 billion worth of long index futures, covered $1 billion worth of short index futures. In fact, they have added $1.78 billion worth of long stock futures and covered about $792 million worth of short stock futures as well. There's a clear trend of FIs building on long positions ahead of the election verdict on the future side, on the leverage side, and which is quite a telling statistic really. So that is one thing to watch out for. Very, very unlikely that we'll have some major downticks coming in the markets ahead of the election verdict as well. Things may change tomorrow and day after, but for now, it doesn't seem like there'll be very sharp downticks. Commodity results are looking strong. Nalco, case in point today, Hindalco the other day, and this may give a further leg up to some of these commodity-linked stocks as well. Predominantly metals, not quite oil per se, but metal stocks certainly in the fray out there. What about the specific stocks to monitor? It's a very long list, so I'll go through them quickly. But first off the bat, Sumitomo Chemicals may have a positive reaction. Revenues are 3.5% at 674 crores. The estimates were 651, but the margin is where the game happened. 20.8 versus 12.4. The estimates were 15.5. As a result of which, of course, PAT went up quite substantially, 52%. Essentially, raw material costs for Sumitomo came down, and that led to this number. Look at that. As a percentage of revenue, raw material costs were 59% versus 69% a year ago. Clear reason why Sumitomo has done what it has done in the quarter and could do well in the quarter as well. In today's session, the stock could do well. Natco Pharma, revenues up 19%, 1,068. The estimate was 952, so ahead of estimates there. Margins, again, where the game happened, 46.6 versus 37.8, and as a result of which PAT numbers look much better, 40% at 386 crores. The estimates were 338 crores. So clearly did really well for itself. Again, I think inventory cost helped Natco do what it did. So good numbers there, could react positively. Nalco, revenues were down, but look at the margin expansion there. I mean, Margins at 30.9 versus 20.9. That's 1,000 basis points expansion in margins. How can you not reward such a performance? The estimates were 21.5%. Now, again, the stock may not do well, but I think if I were you, I would think that the stock will do well. PAT up 100% at 997 crores. The estimates were 552 crores. Very strong show. Again, raw material cost as a percentage of sales, much lower. So, 3 or 4 names which did well. Lumax, I'm a bit undecided about this because the numbers were very strong, but they were in line with estimates. Revenues up 53% at 757. Estimates were 819, maybe marginally lower than estimate, but 53% uptick. Margins at 12.1 versus 11.5. The estimates were 15.2. The PAT number did really well for itself, 51 versus 24. The estimate was 47. So on the top line and the margin front, a bit of a miss. Not in fact, margin's quite a bit of a miss, but the PAT number in line with Bloomberg estimates and a healthy number there, 51 versus 24. That's 100% growth, right? So, did well, but lower than estimates on margins, in line with estimates with PAT. So, a bit undecided about how this one could react today. Let's move on. AstraZeneca, margin was a problem. Revenues up 34.6%, which was fine, but look at the margins. They will come up next on your screen. 12.9% versus 21%. Now, the reason why the PAT number still looks good for AstraZeneca at 129% at 39 crores versus 17 is because this number was marred by a 40 crore exceptional loss this time. If you add back that, then you will know that there wouldn't have been a PAT uptick, there would have been a PAT downtick. So AstraZeneca technically has not had a good quarter. Raw material cost as a percentage of revenue at 56% versus 34%. So not the best of quarters for AstraZeneca. Keep that in mind. Let's pull up the next one. GMDC, not a good number at all. Revenue is down, margins down, PAT down. Number of problems for this one. Mining leases, I think all of that was an issue as a result of which a 53% downtick in PAT. By the way, QOQ, GMDC has done exceptionally well. I think that the stock should react negatively. If it doesn't, it's probably on account of the QOQ performance, though I would always look at these kind of companies on a YOY basis and not on a QOQ basis because they are seasonal in nature. Let's see. Likely that the stock could react negatively. Let's pull up something else. LG Equipment is the next one. Revenues up 3.6%, but margins a problem, PAT a problem, 14.5 versus 15.7. PAT also, as a result of which, relative to estimates, not doing well, down 55%. I don't think the street will take too kindly to this number as well. So, no, not good. Let's move on. Lakshmi Machine Works, again, a number which was not great. Revenue is down 25%. Margins were a bit wobbly, 7.6 versus 9.6 estimated, as a result of which PAT down 30% at 66 crores. The estimates were 91 crores. So not the best set of numbers for this one either. It's a long list of numbers, as I told you, but there's beyond numbers as well. There's some things. Do we have one more set of numbers? No. Now this is beyond numbers. 4 stocks. Adani Energy Board has approved 12,500 crore fundraising plan via QIP. Maybe this reacts, maybe it doesn't, but it's a large fundraise you should keep in mind. It also therefore brings the other Adani stock in focus because Adani Enterprises, the board meet to consider fundraising is today. So keep this in mind. 2 stocks for which we may not have graphics, but I'll quickly tell you. Timken India and Inox Wind. Both of these will be in focus today because of block deals. Timken, I think Timken Singapore is selling about 10% stake at a 10% discount, if I'm not wrong, or a substantial discount. And Inox Wind Energy, the parent company, is selling about some stake in Inox Wind today at a 5% discount. So those are the 2 stocks also that you should keep in mind. Thanks so much for tuning in. In the comments section, please tell us what do you think about this that we've restarted, and if there is something else that you would want to be included in the trade setup, we'll try our best. Thanks for tuning in.